South Africa's manufacturing sector continues to take strain. The seasonally adjusted ABSA Purchasing Managers Index fell to 41.6 points in September. That's 4.1 notches down on the number registered in August and puts the latest figure at a 10-year low. It's also the second consecutive large fall in the PMI and has brought the index more than 10 points below a recent high of 52.1 points reached in July. In a statement, ABSA says that they did caution that given the weak underlying demand conditions, the robust July reading was unlikely to be sustained. 3 of the 5 subcomponents fell sharply, namely your new sales orders, purchasing inventories and business activity. The purchasing price index rose by 3.1 points to 76.7 points. The employment index edged up slightly but remained at a very low level of 39.6 points. Well, for more on this, I'm joined in studio by ABSA senior economist Miyelani Maluleke. Thanks very much for joining us, sir.
Always a pleasure.
This is a very negative number, a 10-year low, and it seems as though it was the key subcomponents of the PMI that actually were hardest hit.
That's right. So we actually haven't seen a print close to this one since 10 years ago, except that 10 years ago we were right in the middle of a global financial crisis. We're not in one right now, and I think for me to see a print like this, when you don't have sort of a more global sort of slow down in economic activity the way that we sort of have 10 years ago is very worrying. But the one thing that is coming out very clearly from domestic manufacturers is that demand conditions domestically largely, but also increasingly from abroad, are really the big challenge here. And I think that's why you're seeing that output levels are remaining as subdued as they are, and I think that is really the sort of overwhelming theme that is coming through from the survey.
So they're not able to say, right, domestic demand is weak, so let's try and rather push towards the international market because demand is not coming right from there as well.
Yeah, that's right. So look, I mean, the international context has sort of been supportive for a bit of a while, and I think where you also kind of see it is if you look at things like South Africa's vehicle sales, for instance. I mean, we've seen a very big divergence between domestic sales and international sales. But what we're starting to get from manufacturers is that although the international environment has been supportive, it's beginning to slow down a little bit. And you also see it when you look at international manufacturing PMIs, that more recently we've also seen some sub 50 prints in terms of global manufacturing activity. So although the domestic story has been weak for quite a number of years now, the international environment has been fairly supportive, but even from that perspective, things are starting to slow down a bit.
So aside from the demand factor, which is obviously very important in the scheme of things, people want to stay in business and keep relative margins up. So what are the other factors or hurdles that are preventing manufacturers to at least still look survivable?
Yeah, so I think one of the really big things that we saw when we did our Q3 quarterly manufacturing survey was that there's just very little confidence in the sector. So just to give you an example, that particular survey actually came out and showed that the business confidence index reading for the sector was just 16. And when it's 16, what it tells you is that 84% of the manufacturers that we spoke to in the quarter were saying that business conditions are not satisfactory. So in addition to the demand issue being a big challenge, one of the things that is still coming out very strongly, disappointingly, is the policy environment, the political environment. Manufacturers are still saying, very strongly that it hasn't been as supportive as they thought it could be in the post-election environment. They still feel that fundamentally they're still facing the same challenges that they were facing for a number of years. I think the big issue is that South Africa's manufacturing, at least compared to some sort of other countries, is not very competitive. And to give you a good example, is that we had that period from 2011 to 2015 when our exchange rate was basically on a free fall, right? And one thing that we sort of expected was that the more outward-facing parts of the sector would benefit from that exchange rate depreciation. But what came out was that we didn't see much of an improvement in export volumes, and manufacturers are saying we're not very competitive. You look at these increases that we're seeing in administered inflation, water costs, electricity costs, our ability to get goods out, etc. Those are just some of the big challenges that they're highlighting and some of the issues that are standing in the way of improved competitiveness.
I think just in reference to what you're talking about, I saw that the producer costs are rising. And given the picture that you're painting around demand, to what extent do you think they'll be able to push those cost increases to the consumer?
It's a good point. It's a very uncomfortable situation for manufacturers that we're actually now starting to see some cost pressures, which I suspect is on the back of the weak exchange rate and perhaps some of this recent increase that we've seen in oil prices. It's very hard to push price increases to consumers right now because consumers are cash strapped. The South African consumer is in a very difficult position. So I think in that situation, what is quite likely that we will see is more margin compression rather than price increases being pushed through, because it's a tough environment in SA.
Given this picture, because the PMI is a forward-looking type of survey, what does this inform? How does this inform what GDP will look like, at least from the component of manufacturing?
Yeah, it's a good question. I have to say that when you look at the official output data for July, we actually had a slightly positive start to the quarter. So that was very encouraging, but I think for me, the one thing that is coming out strongly from the PMI data is that strength may not be sustained, and I really would not be surprised if the manufacturing sector actually subtracts from GDP growth in the third quarter.
So going forward, we can expect a bit more pain before we can see some green shoots?
I think it seems very much like that to us, which is why our baseline view is that even though you did see GDP growth rebound quite strongly in the second quarter, our view is that GDP growth that we're looking at for the year as a whole is probably around 0.5, 0.6%.
All right then, Miyelani, we're going to leave it there on that depressing note. Thank you so much for your time. That was Miyelani Maluleke. He's a senior economist at ABSA.